Good afternoon. We're going to go over the watch list for next week, which is May 11th. The first thing I have up is BA, and probably one of the ones I watch the most. Because even though on the daily it's showing a descending triangle, which usually means it's bearish, but on the 30-minute and hourly you can see an inverted head and shoulders. So you have conflicting patterns. So plus BA has been, hovering down here for so long, and it's rejected the 20 EMA like 5 times. 1, 2, 3, 4, 5. I would imagine that this test is going to probably break out, so I'd watch it over 135 for a run to the probably 145. That's what I'd look for. And normally, even though it is showing a bearish pattern, I just think that for some reason it's just going to go up because it's been beaten down so much, and things are starting to turn around for the airlines slowly. So things are going to start opening up and stocks will start rebounding probably over the next couple of weeks. So I'm going to watch it over 135 into the 145. But if it does seem to manage to break down, I'll grab it under 125 for a retest into the 120s, so even maybe down to 110. But I think this is the week that BA is gonna just break out of this bearish trend and bearish pattern and go into the 145, 150 area. So that's what I would watch for this week on BA. Another one is Triple M, 3M. The daily, it's pulled back and it's chopped around the 20 EMA on the daily, and it broke above the 20 EMA, which is the middle count, closed above it. So that's a bullish sign. I think that if it gets over the 150, it's going to close the gap into the 152s, maybe even 156. So I'd watch Triple M on the long side. ROKU is another one. I would keep an eye on ROKU. Even though it's pulled back from earnings, which was on Friday, Thursday after hours into Friday, I would, it is showing like a little bit of a bearish, triangle right here, descending triangle right there. It can pull back, absolutely. But I think that if the stock market's going good and the streaming services are doing good, that this should do good too. So I'd watch it over 130 to fill the gap into 140 area. So I like ROKU for a gap fill. It can go down, and if it does, maybe under 125, but I'm more interested in it filling the gap from Friday. So I would watch that. Disney is another. I would start looking long if it pulls back. It could come back and fill the gap. If it does, I'd probably grab a long right there because the parks are starting to open up, or they have plans on opening up. And so as the parks open up, the cruise lines start opening up, this should start rebounding and start getting some bullish momentum. So I would watch Diz on the way up over 110, but I'd rather see it pull back to 105 than go in long. So that's what I'd be looking for, either over 110 or around 105. We'll have to see what happens. Walmart is another, and it's just riding this RC trend line on the daily, and it closed above it. It gets over the 123.50. I would look for it to fill the gap into the 128. So I would watch Walmart for a gap fill. Wayfair is another one. I haven't played it, and it's been strong, and the spreads have been bad, but it's just still going up on the 30-minute. It's got like a rising wedge right there. So eventually it's going to fill this gap, and maybe the buyers will stop chasing. The FOMO will stop, and it will actually come back down to the 140. So we'll watch Wayfair for a pullback. I don't know if it will happen this week. Apple's another one. Apple stores are opening up. Apple could keep going, but it did fill the gap on the daily. So, Apple could just keep going to all-time highs. So with stores opening back up and things starting to go back to somewhat as normal as they can go, Apple can keep going. So Apple might be worth buying the dips for, but it's got a rising wedge, and it's got a bearish divergence on the daily. There's so many stocks that have bearish divergences. Like most of the FANGs, just about almost all the stocks that have been following the market this week are in a rising wedge and a bearish divergence. So I'd be careful. I'd be very cautious about going long, and if you do, don't go too heavy, because I mean it could turn on the drop of a dime, or news or whatever that can happen. Facebook's another one. It's pretty much doing the same thing. It filled the gap. Same thing, that bearish divergence on the histogram, and it could pull back right here underneath 211, and perhaps even come down here to 200. But if the market's strong, it's going to keep going up. So keep an eye on Facebook. I'd like to see it pull back, but I just don't know. I think that the FOMO is going to start kicking in, and things are getting back to normal, and it could keep going. So it's really a coin toss on Facebook. I mean, you got bearish signals going on, but bearish divergences can go on for a long time. So it could go back and revisit all-time highs. So Target's another one. I mean, same thing. Bearish divergence right there. It's a rising wedge. I mean, it could pull back. It can also keep going and fill the gap to the 124 area. So keep an eye on our Target for probably a momentum going up. I mean, it just at this point there's so many bearish divergences going on. It's just too many. It looks, I don't know. We'll have to see how the market is this week. And Lilly, I mean, you get this head and shoulders on the hourly right here. I would look for it under 152. If it gets under 152, probably down into the 148s. But I don't really see anything too spectacular this week. I think the biggest one is probably BA and maybe Disney and stuff like that. So otherwise than that, I'm going to probably pay attention to the news that comes in throughout the week and the scanner, and just see what happens during the week. And as things develop, we'll just adjust to it and make calls based on that. So, but it'll be primarily a scanner week, listening to the scanner and reacting to the news. So it's probably going to be a hard week to trade, probably, because there's a lot of tickers I have that have extreme oversold or extreme overbought, and there's a lot of overbought, but it's just the market's just starting to rebound and things are starting to reopen. So I mean, things could just keep going. The momentum could just keep going up. So just be cautiously optimistic, I guess. So that's going to do it for the watch lists, and that's it. Thanks.